back to the show. It's your host, Danny Dhaiphong. We have a great show for you today, so be sure to hit that like button as you come onto the stream. Now, while all eyes were on the Trump administration's embarrassing UN General Assembly performance, China has made a gold move that is set to send shockwaves in the global economy and geopolitical landscape for years to come. The situation keeps getting worse for the U.S. empire, with rumblings of recession getting louder, stagnation and inflation getting worse, and the panic currently striking the top levels of the U.S. empire's military brass, only rising as a rare emergency meeting was called by Pete Hegseth in Virginia as we speak. The decline of the U.S. empire is indeed accelerating, and I have a very special show for you today with two guests and friends of the show. First, we have economist Professor Richard Wolff. Professor Wolff, good to see you again.
Thank you, Danny. Glad to be here.
Great. And then we have market analyst and YouTube host of his own show under his own name, Sean Foo. Sean, good to see you again.
Thanks, Danny. Great to be here.
Yes, of course. Thanks so much for joining me. So everyone, again, hit that like button as we get started here. So the U.S. empire, Professor Wolff, is indeed in trouble. And there are two developments I wanted to show. First, there is Trump's performance at the UN General Assembly. This is what he received, the kind of reception he received by the UN General Assembly during a part of his speech.
In less than 2 years, my administration has accomplished more than almost any administration in the history of our country. America's so true. Didn't expect that reaction, but that's okay.
So nervous laughter during that remark by Donald Trump. And then I wanted to present this because I know, Sean, you've been covering this deeply, and I want both of your thoughts on this. We have China. Bloomberg News reports that China is courting foreign gold reserves to boost its global clout. And it talks about how the Shanghai Gold Exchange is moving as fast as it can to build up foreign reserves of gold, and that this is being backed deeply by the People's Bank of China in an effort to wean off of dependence on the US dollar, a theme that we've both been covering quite deeply here on this show together. Professor Wolff, first, your reactions to these developments, because I think they go together, China's pursuit of gold and this declining empire.
Let me turn first to Mr. Trump's, how shall I say it, remarkable performance at the United Nations. I think what we're seeing, and I've really only come to this relatively recently, is where the reaction inside the United States is now committed to go in dealing with the decline of its empire. And that reaction I used to capture with words like denial. But now I'm going to use a different word. Disconnection is the word I'm going to use. It is becoming the necessity for the political leaderships of the two major parties, Republican and Democrat, with very few exceptions. There are some, but their basic approach is to act as if everything were okay. They are so disconnected from the signs of decline, which I want to say something about in a moment, that what we're seeing are speeches that are more or less grotesquely disconnected. You shake your head in disbelief because you would expect some effort, maybe not a good one, but some effort to contextualize, to explain the decline in ways that might be uplifting, perhaps even. But there is no such effort. There's no need for such effort to explain, because for them, it isn't happening. There's nothing there. So they are happily going ahead and saying everything is wonderful. So let me then very briefly summarize a few of the things glaringly obvious here in the United States that should make everyone shake their head. The level of inequality in the United States is unprecedented in our history. Elon Musk was offered a 10-year contract for $1 trillion by the board of directors of Tesla a couple of weeks ago. That is a symbol of something that is utterly out of control. Mr. Musk is already, as most of you know, the richest person on the planet, with a personal wealth $300 or $400 billion, and he is now getting the biggest contract any CEO was ever offered by any board of directors. That's a level of inequality that is on the lunatic fringe of what is allowable. And I won't go into the absurdity of putting that money in that use rather than all the other social functions that need to be met. Let me give you another one. The top 10% of our people now account for 50% of all consumption. We refer to the American capitalist system as consumer-driven. This is not correct. It is the 10% richest driven. They're the ones who own 80% of the shares on the stock market. They're driving the prices up as they buy and sell shares to one another, oblivious to, disconnected from any underlying economy. The tension in our society is shown to you by the fact that the president has sent troops into the city of Washington, into the city of Chicago, is about to send them to Memphis, threatens to send them to many other cities. What kind of a society is it? And the explanation? Crime. When all the local cities in each of the ones I mentioned, Washington, Chicago, Memphis, police chiefs, mayors, say publicly, our crime is going down for the last few years. We don't need and we don't want federal troops marching around in our streets. Number three, in one of the great examples of out of control political scapegoating, the United States has developed a new additional army. It's called ICE, ICE, whose function so far has been limited to the deportation of millions of immigrants, including those who have lived here, worked here, paid taxes here for years, blaming them for the drug problem, which, if you know anything about the United States, is a problem that includes all social classes and is based on a demand for drugs that the rest of the world provides. So expelling our immigrants is childish. The FBI tells us that the crime rate among immigrants is lower than that among native-born Americans, which again should surprise no one, because an immigrant understands the minimum relationship you have to the police, the better. And if you're undocumented, that is even more true. I could go on, but the point is, it is an economy and a society wrenching apart. We are about to have an election in New York City in which a Muslim socialist is now likely to win and be the mayor of the largest city by acclamation of a population in New York so alienated from the Republican and the Democratic Party, that Mr. Mamdani is his name, is in the position to do as well as he has already done in the primaries. No, this is a country with enormous problems in which the middle class has disappeared and the polarization left and right is in full stride. And what you watched was a president who cannot deal with, cannot acknowledge, is deeply disconnected from all of that.
Yeah, and Sean, given what Professor Wolff just said, how does this move by China to, um, sever itself further and further, and also the rest of the multipolar world from the U.S. dollar via gold? Where does this all fit in to what you've been analyzing? I know you've been following this development very closely.
Sure. But to add on to Professor Wolff's point about Trump's speech to the United Nations, right? I think it's now very evident that the veil has come off, at least with the previous administration, Biden, and the previous presidents. There was at least a bit of a song and dance that the US had the world's best interests, and whatever American policy was enacted was to help the world globalize, was to help the world get more equal. But now everything has basically been turned topsy-turvy. Now, we have seen over the last 3 to 4 months, the United States actually making a mockery of the entire global trading system. And they are going around to even their allies doing a global shakedown. There's at least $1 trillion pledged by Japan, Korea, and Europe, money that they are pledging to give to the United States to help their industries to lower the tariffs. Now, there's many ways to actually take a look at this whole situation, but at least to me, this is a global shakedown. And because of this, every country out there, they're very wary about dealing with the United States, especially when it comes to their financial reserves, when it comes to holding US treasuries, even when it comes to transacting in dollars, because you have no idea what could come down the road, right? The United States, they are floating ideas about crypto, about stable coins, virtual currencies that's pegged to the United States dollar. What could actually go wrong down the road? A lot of things could go wrong down the road. So what we're witnessing now is China actually taking the offensive, going beyond just mere de-dollarization. Now, de-dollarization is simple, right? Country A trades with country B. Instead of using dollars, they use other types of currency. And that can be the euro, that can be the Canadian dollar, that can be the Chinese RMB, even the Russian ruble. All these are de-dollarization. But that's only one part of the equation. And at the end of the day, a lot of countries out there, especially in BRICS, when they trade with the West, they have a big trade surplus out there. Now, the traditional idea is to run to dollar assets because at least once upon a time, the dollar was quite stable. The value didn't really go up very much. The value didn't crash a lot. But we are seeing enormous amounts of volatility over the last 5 to 6 months to the last 12 months, right? The dollar has lost at least 9 to 10% of its value. And right now, China is moving towards the offensive to actually tell the world, hey, there's other reserve assets you can put your money in. Doesn't have to be Chinese bonds. You can simply put it in gold. And this is what China has been engineering over the last 5, 10, or even 20 years. They have been stockpiling gold aggressively. Chinese reserves, I think, is around 2,300 tons. That's the official number, but I suspect it's 5 or even 10 times more. And with all this physical metal within Chinese vaults, they have the Shanghai Gold Exchange. And recently, China has been supporting their companies going around the world, fleshing out gold mines. So now China has a huge population that consumes gold. They have a huge amount of mines that's producing gold as well. They're the biggest producer in the world. So now China's going around telling countries, why don't you buy gold from us and you store it with us, right? Maybe you don't really trust the West. Maybe you just want to diversify with us. You can do so. Because if we look towards the past, all the way back to the Cold War era, all the way back to the post-World War II era. A lot of countries, they were essentially broke, right? We can all remember the weapons lease, the land lease program, where the United States decided to fund the British fighting the Germans at a point of time. And they demanded payment more or less in gold. So the United States was sitting on top of a pile of gold. And when countries decided to rebuild themselves, they just stored all their gold within the vault in the Federal Reserve as well as the Bank of England. So right now, China is trying to undo all that. They're trying to tell countries, especially in BRICS, don't store your gold with the West, store it with us instead. And as this process continues, China will be sitting on a vault of extreme wealth. And the options for them down the road is going to be endless. They could use the gold as backing. They could back their currency with it. The options are truly limitless at that point.
Yeah, Professor Wolff, what's your reaction to this development? Because all those developments that you stated earlier in terms of what's happening in the United States, this has a huge impact on the world's trust in the dollar. And then you have arguably the biggest economy in the world, China, moving toward gold, which is almost the antithesis of the dollar system, given how the US dollar really became dominant several decades ago, over 40 years ago. So how do you see this move's significance in this changing world order?
Well, it'll come as no surprise if I say to you that I think Sean is quite right, and he's telling us yet another symptom, if you like, yet another development in the decline of the American dominance since World War II and the rise of China and the BRICS as an alternative pole in the global economy. I mean, if you look at the GDPs, and I understand the gross domestic product is a very rough measure, but it is what we use to understand what is the size of an economy. The total output of goods and services in one calendar year, your GDP. And we keep track of it because it's a useful metric, if you like. Well, if you add up the United States and with the G7, United States, Canada, Japan, Britain, France, Germany, and Italy, they were about the same size as China and the BRICS back in 2020. The lines crossed. Since that time, the China and the BRICS have grown faster than the United States and the G7, so that now they are quite far apart, and each year the relative economic footprint, the wealth, the economic resources and power that China and the BRICS bring to the world are larger than those the United States can. With the new statistics here in this country, released a couple of days ago, now that Mr. Trump has rearranged who does the statistics, we have been told that our economy grew 3.8% in the last quarter, much more than was expected. But even with that, given the very bad performance in the earlier two quarters this year, we will be lucky if we get 2% growth in the United States for the year 2025, the current year. Well, China's growth is expected to be around 5%, more than double. India's even larger than that. And that's been true year in and year out. We don't discuss it much. Here in the West, we don't discuss it hardly at all. But that's the core reality out of which these other phenomena occur. Of course, they want to have a better position in regard to global reserves. Of course, they want to be able to fund the enormous trade among them, I mean, China and the BRICS, without being dependent on the West. Even in every European capital today, if you meet privately with the European leaders, they are furious partly at themselves, that they are as dependent on the United States as they were complicit in becoming over the last 75 years. Of course, they dare not say anything because they remain dependent. That's why they have this classic psychological transference. All the rage and all the anger about being abandoned by the United States because of the shakedown that Sean beautifully summarized, they can't express it, they dare not, so they demonize and scapegoat the Soviet Union, Russia, on a scale that is literally absurd. But it shows you that the West is having a terrible hard time accommodating its decline. And now, I think quite smartly, the Chinese are tiptoeing around, not wanting to provoke the war, but having to take steps to adjust the world economy to their own ability to continue to grow and prosper as they have promised their people they're going to do. And the rising gold price, which is indeed spectacular, and the declining dollar value, which is also remarkable over the last 6 months, are simply milestones along the way of this adjustment, while most people seem to be afraid of confronting the actuality that makes all that happen.
Yeah, and Sean, maybe you can answer this, because I've had some people come and message me saying, well, the dollar's value is actually rising, and so that means the dollar is very strong. And it's almost by the day that you get these updates. I know you follow them quite closely, where it says, well, the US dollar is rising now versus falling the day before or the week before. But what's the overall general trend that we should be aware of, given China and BRICS' move toward gold as a more stable foreign reserve?
Sure. I think it's very important to understand that dollar cycle.
Oh, sorry about that. Sorry about that. You're back.
Dollar cycles doesn't just move within days. It doesn't move within months. It doesn't even move within years. It's a period of 5 to 10 years where big transitions are taking place. And obviously, we are in a very volatile period. We are in a very chaotic period of a trade war, which might go beyond 3 or 4 years. We do not know who will be the next president. It could be President J.D. Vance for the next 8 years after Trump, for all we know. And if that's the case, the chances of the dollar actually rallying meaningfully going up is going to be quite slim to none. And maybe Slim just left the building. The issue with the dollar that everyone likes to cherry pick, compare the value day to day, it's simply a measurement against other currencies. Now, at the end of the day, every fiat currency in the world is going to lose value, right? It might be 2% this month, it might be 2% this entire year, but the value is all going down. Now, what we are looking at is the US dollar losing 10% over the last 6 months. As Professor Wolff pointed out, this is spectacular, it's remarkable. And it shows that during a period of chaos, where traditionally money would all flow to the dollar, it's not really happening. Now, there's a lot of reasons why. One reason is basically the world, they're just trading amongst themselves. Let's not forget, during this period of the tariff war, Chinese exports are actually increasing in aggregate. Now, sure, Chinese exports to the United States is dropping by 20 to 30%, but their trade with the rest of the world is up by 7 to 10%. And we can all understand and we can all admit to ourselves that the Chinese, they are not settling their trade in dollars. Chances are they're settling it in bilateral currencies. So let's say they're trading with India, they'll be taking in the Indian rupee, and let's say they'll be settling the rest in the Chinese RMB. So when we are trying to come to the argument of the dollar strength, it's a bit superfluous in the grand scheme of things, but it's very important when it comes to this trade war. Because as the dollar continues to drop, chances are a lot of money, a lot of capital will be pulled away from the US assets. Now, if we look over the last 5 years, the worst performing asset in the United States is Treasury bonds. Now, how can this be the case? Treasury bonds are supposed to be the gold standard, right? They're supposed to be a safe haven. But if you were invested in longer end bonds like 30-year bonds for the past 5 years, you'll be losing 8 to 10% of its value. Now, many of us here don't really invest in 30-year bonds, right? I personally would find it a silly move. But many major countries, especially those in the G7, Britain, Europe, the EU, they hold a lot of these treasury bonds. So they are actually witnessing their entire country's wealth dropping. And there's no way for them to actually redeem the bond now and get whatever value they have without incurring the wrath of Trump. So right now, we are watching a lot of countries get nervous as the dollar continues to drop, as the price of gold continues to go up, and as this disparity continues to go on, a lot of countries, they'll be forced, whether they like it or not, to consider taking out their money and putting it into other reserve assets, whether that be gold, whether that be investing in their own country. The future ahead for treasury bonds, US bonds, is not really looking good.
Yeah.
And if I could add to what Sean said,
Sure.
a kind of a balancing, take a step back historically, which is what he asks us to do. And he's all absolutely right about what happens with gold and the treasuries. You need a longer horizon to understand what the impact is. I want to remind people that the spectacular rise of the People's Republic of China, if you look at the last 40 years, as it emerges from being one of the poorest countries in the world to being the economic superpower it has become, all of that was done in the international period of the absolute dominance of the US dollar. The dominance of the US dollar was not an obstacle to China's economic development. United States policy tried in a variety of ways to hold back Chinese development, no question, but it didn't succeed. And indeed, the Chinese were able, within the framework of a dollarized world economy, to become the powerhouse they are now, to become able to not only think about, but actually to rearrange the world system. But I sense in them no rush at all. And I don't find that a mystery. I think they are playing a complicated balancing game, and not only not to provoke Mr. Trump, although I'm sure that's part of it, but also because there are ways in which the dollarized global economy, even as the dollar loses, as it has for years now, its international importance as a reserve for the currencies, as a medium of exchange, as a store of value, all of that, it is still a part of the world economy that the Chinese are able to use to the advantage of their own economic growth. So they're not in a rush. They are not the aggressor here that the United States likes to portray it politically. They're really a much more subtle accommodator. And the irony of the United States is, if it wants to maintain the global role of the dollar, it can't let it shrink in value. Mr. Trump understands enough to say that, but his policies are having the reverse effect, and he doesn't know how to square that. And a little footnote for people to get a concrete sense. I am speaking to you from Manhattan in New York City. And one of the most elegant neighborhoods in the city is Fifth Avenue. If you visited New York, you will know what I'm talking about. I live nearby there, and I walk, and I see apartments that are dark all the time, even at night when they should be lit up. So I ask my real estate friends, and they say to me the following. an enormous part of the real estate in the most expensive parts of New York are owned by foreign wealthy people who are not Americans, and for whom an apartment on Fifth Avenue is simply a way of holding a dollar-denominated asset which appreciates over time, and which various of their relatives who like to visit New York as tourists can stay in when they're there. But they're mostly empty. In the evening, the windows are dark. And what I'm told is one of the sustainers of high-end real estate in New York right now is the sale by foreigners of those apartments.
Yeah, and I think this is a good place to get your comments on, there's been a lot of conversation about the cut in interest rates by the current administration. And the news is that they are going to drop as much as 1.5%. And that economists are looking at this and saying that this is actually going to further weaken the US dollar and actually boost China in a lot of ways. And then we've had especially British media, The Economist, they've been publishing piece after piece after piece about China-led de-dollarization. China's ditching the dollar fast, and they show this graph here of the increasing number of cross-border inbound payments, the percentage of them over the last 15 years being done in their own currency. And then there is this curious one, and maybe Professor Wolff, you can start on this real economy issue when it comes to de-dollarization, because I think this is something that not many people talk about when it comes to how the US and China are going such different directions. The Economist warns that a made in China plan is for world domination is occurring because Donald Trump is failing to stop China's rise as a manufacturing superpower. And this is the big one. A lot of Donald Trump's bluster has been about to save the dollar and to get rid of any kind of surplus that another country enjoys on the United States. But here you have China's surplus in trade. It's going to exceed $1 trillion in 2025 as it ships in record numbers to Africa, Asia, Europe, and Latin America. So as Professor Wolff, briefly, if you could begin on this, how does the real economy issue really explain what's going on here in these divergent paths?
Yeah, well, I think it's more of what I said before. It is an economic performance in and by China and the BRICS that the United States is unable to stop and unable to match. And the result is what we see. Let me give you a couple of other examples. The latest inflation numbers I saw for China over the last year, August 2024 to August 2025, is negative. In other words, they don't have an inflation. I believe it was 0.4% or something like that, decline in prices. Okay, if year after year, even a modest inflation rate in the West and deflation in China, then their products are, of course, going to be that much more competitive in the global world, and you're going to see the export numbers that you just showed us. But it's coming out of an economy that is the way the Chinese do it, socialism with Chinese characteristics, this complicated hybrid between private capitalism and state-owned and operated enterprises and state management of that hybrid. They have figured out how to maneuver in a dollar-denominated world, even as the dollar's role in the world shrinks. And there's a desperation emerging in the United States as it confronts its failure to do much about it, and it pays the price of that failure. And the irony was many American corporations that went to China in the period after Nixon and Kissinger meet with Mao Zedong and so on, many of those companies that went there wanted to participate in what they correctly saw as the growth sector of the future, not just for low wages, important as those were, but also, and I think equally, to be in the right place for what is emerging as one of the great growth markets in the history of capitalism, namely China, even before the BRICS become a reality. You want to be where the growth in the market is taking place. That's not the United States. And so even the people who run the capitalism of the United States are large members of a group that did an exodus to China, that understands to this day they don't want to be kept out of that growth area. What you have is a lame political class in this country, not allowed to see what I've just summarized and what is public information, and therefore understands its role to be the disconnected pretense that this isn't going on, shaking the finger at China, but in fact, not blocking its economic dominance emerging, not even slowing it down very well, but being very upset when the evidence comes back of what this reality is.
Yeah, and Sean, this article in The Economist in particular talks about how China is ditching the dollar fast, and I know you've covered this development too, the developments of the digital yuan and non-bank digital payments, and that actually China is also building a system that's an alternative to SWIFT, the CIPS. What do you know about these developments and how it fits into this trend of de-dollarization and all of the factors and forces that Professor Wolff just outlined that is pushing this?
I think one of the biggest worries for countries adopting de-dollarization is the wrath of the United States. Over the last 3 to 4 months, we have seen how nasty things can get. Tariffs is just one side of the coin. The United States has a lot of tools, a lot of weapons in their belt they can actually use. One can just think back to the purchase of Russian oil by India. Trump went to the Europeans and he kind of told the EU to join him in sanctioning more or less the biggest economies in BRICS, namely India and China, for buying Russian oil. Now, that is totally ridiculous, probably not going to happen. I don't even think the EU will be that crazy, that stupid enough to follow those set of orders. So we can just extrapolate this idea and put it into the de-dollarization camp. Now, countries around the world, as we said, they are afraid of US retaliation. So countries, they are looking for a way to de-dollarize, to do more trade in bilateral currencies, but they need to find it out. They need to have a kind of mechanism, a kind of platform that is away from SWIFT, which is the predominant transaction platform today. Now, if I'm not wrong, SWIFT controls anywhere from 80 to 90% of global transactions, especially when it comes to those in big volume. And SWIFT, one of the member countries, founding countries, is the United States. It is centered somewhere in Europe. And more or less, I guess we know that the US has veto powers over that, right? The US has enormous veto powers when it comes to a lot of the multinational banks as well. So what China is trying to do, firstly, is just sanction-proof themselves when it comes to SIPs, when it comes to the digital yuan, when it comes to setting up their own payment rails, because they have seen what has happened to Russia. When Russia was kicked out of SWIFT, there was a period of transition. There was a period of chaos where the ruble did tank quite heavily, right? The ruble dropped 10, 20 to 30%. And Russia did depend on quite a bit of Western imports at that point of time during the initial period of pain. So Russian inflation, naturally went up quite high. I think it hit like 10, 15, or even 20% at one point. Yes. China understands this. So they're trying to sanction-proof the entire country by developing alternatives. Now, as this alternative starts to grow, this alternative starts to propagate around the world, countries, they look at it and say, all right, Now I have a kind of a black box mechanism where I can trade with China. No one knows whether we are using the US dollar. No one knows whether we are using the Chinese yuan, whether we are using euros, or whether we are using rubles. So all this is under the radar from the United States. And what the US doesn't want this to happen, because the more bilateral currency trade goes on, obviously the demand for dollars will go down. And by proxy, a lot of demand for US assets like bonds will also drop at the same time. And that's why the US is going around the world. They're trying to figure out all kinds of ways to actually create artificial demand for the dollar. And that's why we saw Scott Bessent, I think 2 to 3 months ago, talking about how stable coins around the world can raise $2 trillion for the demand of US debt, for the demand of US treasuries, because he understands the dollarization is going on. It's not just in countries buying gold. It's not just countries trading with each other in bilateral currencies. It's countries now taking their money out of US bonds and just purchasing other types of bonds out there, even Euro bonds, even Chinese RMB bonds. So this is a very big pressing issue. China understands this. Now, when they developed the rails for the digital RMB, for the SIPs, as I said, it wasn't really to dethrone the entire SWIFT system. Is just to create an alternative platform. But as this trade war goes on, as things become more, there's more animosity between the United States and the world at large, countries, they'll naturally just gravitate to this alternative platform. China really doesn't need to point the finger or to create some sort of a gravitational pull for it to happen. It's just happening naturally.
Yeah, and Professor Wolff, when I read I know that you'd probably do this too. You scour the financial related news, the economic related news in the United States. It's all about interest rates, cuts of interest rates. How is that going to affect things like inflation? Then when you read about what China is doing, it's almost even the Western mainstream media now, the US mainstream media acknowledges that it's mostly about building things. It's mostly about infrastructure. It's mostly about manufacturing. There's a lot of panic about Chinese manufacturing. Why is it that the United States is so obsessed with this particular kind of financial realm of economic development, and why is there so much panic about China's alternative focus?
Well, I think there are many ways to answer that. The United States is now a society that is highly financialized. Our leading industries are finance and everything having to do with finance on the one hand, and high-tech computerization on the other. I'm exaggerating, but most of the industry in this country has been hollowed out. It is either gone to other parts of the world, like China, or it is so highly automated that whatever use it has as an employment mechanism, it isn't useful at all. For example, the few companies that have come back to the United States after all of the rhetoric of Mr. Trump in his first presidency, how he's bringing them back, or how Mr. Biden promised to bring them back, and then Mr. Trump again, but they're not coming back. The only ones coming back are those who want to be near Silicon Valley, who want to be part of the high tech, which is still relatively strong as an industry here. And of course, those kinds of companies hire almost nobody, high-tech engineers who often come with them from the other country, unless they are treated like the South Koreans were, in which case they won't come anymore. And you won't even have that relatively small trickle that has no appreciable impact on the level of unemployment that we have. So the whole country is focused not on that sad story, because that's a story of loss. That's a story that took 40 years to really become powerful. So it's not going to be easy to solve, and it's not going to happen quickly. But the problems have accumulated, so you need a quick solution. So you're hopeful that between the political bluster of an aggressive presidency and the manipulation of finance, you might be able to at least get through this period. The point of the interest rate drop in this country that makes it urgent has to do with capitalism's instability. According to the National Bureau of Economic Research, a major source of what we use in economics, the capitalist system, wherever it is settled, here in the United States or anywhere else, has an economic downturn on average every 4 to 7 years. That's an average, so it's not every time, but on average 4 to 7 years. And if you look at the United States, we had the dot-com crisis in the spring of 2000. We had the subprime mortgage crisis in 2008, 7 years later. And we had the COVID-19 crisis in 2020, again, within that range. Okay, if it's 4 to 7 years and the last crash was 2020, and here we are in 2025, we're all expecting it. The financial community knows it. And Mr. Trump understands, having not succeeded in putting people back to work the way he promised, having not succeeded in stopping the inflation, we still have 3 to 4% inflation. He does not want the political problem of a recession at the end of this year or in 2026. And he's furious with the Federal Reserve and about to get rid of Mr. Powell and firing Ms. Cook in order to get that interest rate down, to push a cheapening of borrowing, to forestall the recession, to make it go back in time so he can at least get the successor to himself, or himself, if he changes the law to allow a third term, so he can get a race in before the political damage that a recession will produce. That concern dwarfs all the others at this point.
Yeah, and Sean, could you help also the audience understand the significance of all of the interest rate madness that is occurring right now in the United States and how it influences this larger global push, not just away from the dollar? I think de-dollarization is very important, but it really is a symptom and sign of a real global push to move away from the U.S. as an economic harbinger of trade and development itself. So where does all this interest rate madness fit into this? Because the U.S. is not looking like a very stable economic player on the world stage.
I think according to Professor Wolff's point about the firing of Lisa Cook to, push down interest rates, I think it's totally crazy that of the situation happening in the US right now. Now, the Federal Reserve is supposed to be an independent body that sets interest rates, whether it's lowering it or whether it's bumping it up based on US economic conditions. But Trump seems to be planting his people there, right? I mean, the latest introduction of Stephen Moran, who is now a Federal Reserve governor, is totally, it's out of this world. And this one person, he really loves a weak dollar policy. Because a weak dollar at this point of time is really needed to stave off the coming US recession. Now, the US recession, as Professor Wolff said, is more or less inevitable. It's within reach. A lot of people in the financial media, a lot of the banks, they're all predicting it. They're all bracing for impact. Now, the problem with lowering interest rates at this point of time, in this juncture, is that firstly, you have a tariff war that is going on. And tariffs in the United States is anywhere from 15 to 20% on average. So people shopping at Target, for example, just a year ago, their purchase was around $100. Now it's $120. Now you ramp things up by lowering interest rates, prices are going to rise up, especially when it comes to assets. So now we have a bigger bifurcation of the people who have and the people who have not. The top 1%, they're going to get richer, and the middle class and the people in lower class America, they're going to get hollowed out. So countries around the world, they are seeing this financial destruction within the United States. Now, this would mean that the US on aggregate will be growing slower than other countries, especially when it comes to BRICS. In 2025 to 2026, we can expect at the most a 2 to 2.5% growth in the US. And a lot of this is being fueled by artificial money, by debt, by deficits. A lot of money is still being borrowed from the world to fund the US deficit. Now, in this year alone, if I'm not wrong, the amount is going to exceed $2 trillion. Can you imagine the amount of money that is, the tsunami of cash that's going to wash over the entire US? And if you bring interest rates down, what do you think is going to happen? The people who have money, people who have access to capital, the big corporations, the billionaires, they're going to take all this cheap money and they're going to funnel it into assets. At this point of time, we have reached an unprecedented point of corporate stock buybacks in Wall Street. A lot of companies, all the big companies, the tech giants, even some of the major banks, they are buying back their own stock because they really don't see an avenue to invest in the greater United States. And can they even invest their money overseas? And this is another problem with Trump's trade policy. He's going around telling many American companies, even companies like John Deere, if you dare to manufacture your stuff in cheaper places, whether that be Mexico, whether that be in Indonesia, whether that is in China, well, you can manufacture there for sure. But when you bring the goods back to the US, we are going to tariff you to oblivion. So now companies in the US, they are stuck. And many foreign investors, many central banks, many countries, they see this development really come to fruition. And because of that, they are saying, all right, now the US dollar is becoming less and less useful. One reason why countries put their money in US bonds, in US assets, is because one, the dollar was stable or it would rise. Now, secondly, it was because US interest rates was higher than many parts of the world, right? China, for example, is only yielding 1.8% on their 10-year bonds. The US today is still above 4%. But what happens when you force interest rates all the way down? You remove an additional incentive to hold this toilet paper of a currency. So now we have a collapsing dollar, and now you also have interest rates dropping. The incentive to hold these, the yield is going down. So normally as investors, you're like, no, I'm getting hammered by inflation. Trump's tariff war is destroying the dollar. And now his henchman in the Federal Reserve is trying to influence interest rates down. Why should I stay in dollars? I need to get out. I need to take my money and put it into various other assets. And paradoxically, if this happens, it will just force US interest rates to stay high. It will make the national debt accumulate at an even faster rate. And it's not going to end well for the United States. We're going to reach a point of default sooner or later. And the biggest conclusion of this, I can say, is going to be much more money printing on an unprecedented scale that we've never seen before. It's going to dwarf what happened in 2020 and 2008 combined. It's going to be TARP times 5, TARP times 10 at the very least.
Yeah, and Professor Wolff, that sounds like a recipe for recession, what both of you just said. What is that recipe exactly, though, if you could put it all together for us in the last few minutes we have here?
Well, we have the cyclical quality of the American economy. We have the decline of its empire. We have the desperate, and that's what it is, desperate act of a tariff war against the whole world, the extortion, or as Sean puts it, the shakedown of vast amounts of money that have to be promised. And remember what you're asking of another country. You're asking them to, the political leaders, to go to their own people and say, here's $300-500 billion that was raised out of your economy in Europe, but you won't get the benefit of it being invested here. That goes to make jobs in the United States. That's an impossible political position to support. And this generation of leaders is going to go down in flames if it tries it. That means all of this is very iffy. And if you put that together with the growing inequality, and again, I want to remind you, top 10% do 50% of the consumer purchases. If we start having a breakdown in the capital markets, a sense of the overvaluation of paper assets by the inequality in the world, and that you better get out of the stock market quick because it's going to have a meltdown, you're going to see not just the stock market go down, but consumption will collapse as the top 10% don't spend anymore, given the fact that they are hit by that. You put all these things together, and even if some of them are offset or they don't all happen at the same time, you can understand why the financial press in the United States now is very anxious, explicitly. It's right out there that we're going to have a recession, and it could be a very bad one.
Yeah, and Sean, as we close up here in the next few minutes, what is your impression of the overall trend now? As what Professor Wolff said, there's going to be a very bad recession, and usually that has a major global impact. And a lot of the world might look, for example, at China and say, well, we might even have to get closer and closer to China, given that the last several recessions that have occurred, they have actually made out quite well and have not had the same issues that, let's say, the US and the West have had in terms of volatility. How do you see the general trend as we move toward this kind of economic inflection point influencing the geopolitical situation?
I think this can be best summarized by what happened over the last week. Now, we have Scott Bessent, the Treasury Secretary, come out and say they are going to help bail out Argentina with a $20 billion swap line. Now, what this means is that the United States is recognizing their global influence drop around the world. So they are in a desperate scramble to really consolidate whatever power they have left in the Western Hemisphere, in South America. Over the last 5, 10, or 20 years, the United States has lost a lot of ground to BRICS, to China, who has been busy building jobs, building factories, developing mines, and helping fund countries like Brazil all the way to Argentina. And the US knows that even though they have this tariff policy, even though they are committed to shift industries around the world back to the US, they are losing the big game. And when you lose the big game, you start to lose control of your economy, you start to lose control of your bond market, you start to lose control of the dollar. Now, case in point, Argentina was supposed to dollarize their economy. They are supposed to replace the peso with the US dollar. But that isn't working because one of the big reasons is Trump's tariffs that is just crushing Argentina's economy to an even more severe degree. So Argentina, they have been selling a lot of their dollar reserves to prop up their local currency, and this is just freaking the United States out. Now there's even less demand for the greenback, and it's losing even more relevance on the global stage. So we are starting to see a lot of missteps that was started in the Biden administration, made exponentially worse in the Trump administration, and the US is now on a desperate gamble to squeeze money from their allies. They're trying to desperately right the wrongs when it comes to countries like Argentina. They're trying to compress 40 years of neglect into just 4 years of scrambling around, making desperate actions. And I think the world sees this, and that's why people in the UN Assembly, they just laughed when Trump made those absurd statements.
Yeah. Yeah. Well, very astute comments from both of you, gentlemen. This was a great show. I want to make sure that people are pointed to the video description as we close up here, where you can find Sean's work. You can find his YouTube channel there. You can also find Democracy at Work's YouTube channel, which Professor Wolff is the co-founder of. Any final comments before we head out today, gentlemen?
I would say only that what we are seeing is an inflection point, Danny, to use your term, but it really is an inflection in the world economy. We are seeing the decline of one system, if you like, broadly defined, and the rise of another. And much of what we are experiencing are the dimensions of that enormous, complex shift. But we would all be better off if we understood it, if we admit that that's what's going on, and maybe we could then appeal. And I understand how long of a shot this is for the two sides, the United States and China, to sit down and try to work out the transition rather than pretend, in the United States case, that it isn't going on. That leads to the saber rattling and all the rest that frightens the whole world every few weeks and is not good for the mental health of the whole planet.
Indeed. Everybody, hit the like button before you go. That will help boost the stream after we are done here. In the video description as well, you can not only find Sean and Patrick's YouTube channels, but you can also find all the places to support this channel, Patreon, Substack, and so much more to help support independent media. I'll be back on Monday, where I will have Patrick Henningsen. I'll have first-time guest Matthew Kennard, and maybe even another guest as well joining us all to cover what's happening in West Asia, Gaza, the flotilla, and so much more. Everybody, hit that like button. I'll see you all again after this weekend. Bye-bye.